do a Roth IRA conversion if I'm retired? Hey everyone, Adam Bergman here, tax attorney and founder of IRA Financial. In today's AdBits, I'm going to chat about Roth conversion rules and how it works if you're retired. So, wanted to just start at the beginning. Talk about first what a Roth IRA conversion, then talk about some of the benefits and potentially some of the negatives. And then thirdly, of course, answer the question of whether you can do a Roth conversion if you're retired. So firstly, Roth IRA conversions essentially mean that you take a pre-tax IRA and you convert it to Roth. And you essentially pay tax on the fair market value of the asset, if it's stocks or real estate, in-kind asset you convert, or on the cash converted. And you pay ordinary income tax, not capital gains. So essentially what happens is the amount you convert gets included on your income tax return, your Form 1040, along with all your other income, compensation for services, for example. And then that's added together, and whatever that net amount is on your 1040 will determine your tax rate. So obviously strategies come into play. Do you have losses that could potentially offset some of the gains from the conversion or some of the taxable income from the conversion, and what your tax bracket is? Maybe you had a low income producing year, and maybe this is a good time to add a little bit of income through a Roth conversion. So as of 2022, there are no income limitations on conversions. Anyone can do a Roth conversion, whether you make $1,000 a year, $100 million a year, or here's a peak, even if you're retired. Anyone can do a Roth IRA conversion. Taxes still due. There is no 10% early distribution penalty. So if you're under 59 and a half and you do a Roth conversion, you still only have to pay ordinary income, not capital gains on the conversion, but ordinary income tax. No 10% early distribution. Whatever the amount you converted gets added to your 1040, and your tax rate's based off the aggregate amount of all your net income or your adjusted gross income for the year. So no income limitations for conversions. Anyone can do a Roth conversion. What are some of the advantages? Well, obviously, the whole idea is you want to go to Roth. Why do you want to go to Roth? Because once you're 59 and a half and the Roth's been open at least 5 years, anything you pull out of the Roth IRA would be deemed a qualified distribution, and therefore everything would be tax-free. Everything would be tax-free. That is obviously massive benefit, because if you just kept your money in a pre-tax IRA, once you're over the age of 59 and a half and you take a taxable distribution, whatever you pull out would be subject to income tax, ordinary income tax. Whereas if you did a Roth conversion, you are moving that income to Roth. Now, yes, there is a toll, right? You have to pay tax on the amount you convert, but so long as you can wait till you're 59 and a half, the Roth's been open at least 5 years, it's all tax-free. So that's the main advantage, right? You have an opportunity to convert at a low value. Maybe it's Bitcoin, it's stocks, it's real estate with a depressed value. Maybe you think the value is going to go up tremendously in the future. Maybe you're investing in the next Facebook, the next Twitter, the next YouTube, and you think this is a really good opportunity to convert at a low value. Now, the disadvantage, obviously, is things go the opposite direction, right? Everyone has memories of Enron or Lehman Brothers or Bear Stearns, or Bitcoin, where let's say you converted at 60,000 of Bitcoin, or you converted at before Enron went bankrupt, and now you just sent Uncle Sam a big, nice check. Well, not nice, a big check for a converted amount on stock that 6 months later, or a year later, or a couple of years later is worthless. That's obviously a horrific worst case scenario, but stuff happens, right? You think this private business you're investing in is going to be an IPO, and then things happen and the business doesn't perform, it falters and ends up not performing, and now you just pay tax to do a Roth conversion on an asset that may not be worth a lot of money. So things to keep in mind. What are some of the other items to ponder before you do a Roth conversion? Number one, obviously, how confident are you in the investment? Number two, can you pay the tax? Right? It makes a lot more sense to pay the tax out of your personal income than just pulling it right out of the Roth IRA and paying the tax. That's definitely not optimal. So you need to have confidence what you're doing. You got to be able to pay the tax. What's your tax bracket? Are you at a low tax bracket now? Are you super high? Do you have losses maybe? Maybe you have NOLs from previous years that you can use to offset the amount you convert. And then obviously what's going to be your tax bracket when you retire? If you tell me that, hey, Adam, I'm in a very, very high tax bracket now, and in 10 years when I retire, I'm going to basically have no income and it'll be at a very low tax bracket, then maybe a conversion doesn't make a lot of sense because maybe you're better off keeping it in pre-tax. Don't pay tax on the conversion now because you're at a high tax bracket. And then when you pull money out to live off in 10, 15 years, because you'll be at such a low tax bracket, not a big deal, right? So maybe you can keep your tax bracket around 15, 20% and just pull off enough cash to live. So that's another option or another factor, I should say, that you should look at before doing a Roth conversion. So going back to the question at hand, can you do a Roth conversion if you're retired? Yes. You can do a Roth conversion any point you want. You could be 18 years old, 30 years old, 50, 70, 80. Doesn't matter. You don't have to have income. You just need to be able to pay the tax on the amount converted, or hopefully there's no tax at all because you have losses to offset the income. And what about taking discounted valuations, right? What happens if you have an interest in a privately held entity like a farm, tract of land, it's 10 partners, your IRA owns 10% of it? Could you potentially argue that you paid 100K, but maybe on the open market, it's only worth 60 or 50K? Because who in their right mind would buy a 10% interest in a closely held farm that's not marketable? Yeah, there are appraisers out there that will give you a discounted valuation anywhere from 10 to 40%, depending on the facts, circumstances. So definitely something to keep in mind as well that could have a potential impact of reducing the amount of taxable income based off a discounted valuation, which would be the basis of the conversion amount. And obviously that would determine how much tax you have to pay. So all in all, there's no right or wrong on conversions. I get this question, honestly, 3-4 times a day. Should I do a conversion? I don't have a magic ball. I can't tell you what's going to happen in the future. I don't know, right? I don't know if your investment's going to be a home run or it's going to be a strikeout. I have no idea. And probably either do you. So that's just an educated guess. That's something you have to understand the risk. The reward, obviously, is you're over 59 and a half. The Roth's been open 5 years. Your $100,000 investment is now worth $3-4 million. It's all tax free. That's best case scenario. That's the home run scenario. And then on the flip side, the worst case scenario is the Enron or Lehman Brothers or Bear Stearns, where you let's say converted at the high share price, and now the shares are essentially worthless. And you send Uncle Sam in a big check, and now you can't even sell the shares. So those are the two extremes. And then most people are somewhere in the middle, right? They convert at 100, maybe they sell it for 200, 180, and it ends up, hopefully working out. So I can't tell you whether you should do it or not. Obviously, you got to understand the factors. Maybe there are some opportunities to reduce the taxable income, whether it's through NOLs or discounted valuation. But yes, if you are retired, you can still do a conversion. You may want to think twice about doing a conversion at a retirement age. Why? Because your income level is probably low, right? You're retired. And by doing a conversion, that will increase your income level and put you in a higher tax bracket, which you may or may not care, depending on if you have losses to offset that. But you may be able to just do distributions a little bit each year where the tax hit won't be significant. Last thing I want to mention is you can always do percentage conversions. You don't need to convert 100%. So if you have 100 shares of Tesla, you can convert 20 shares over 5 years, right? You don't have to convert all 100 today. So if you are retired and let's say you own, 5 Bitcoins, you don't have to convert them all at once. You could do percentage, 1 Bitcoin a year, or half a Bitcoin a year, whatever you want. Just talk to your tax advisor because you don't want to take in too much of income where your income tax rates go too high. And obviously, if you have losses, you want to make sure you're converting enough just so the losses can eat up most of the gains. So this is something I always suggest. Talk to your CPA, your tax advisor. You have until 12/31 each year to do conversion. So there's generally time to strategize. Usually around November, December, that's when people start really looking at their tax bracket, their tax situation, kind of seeing where they're at, what losses they potentially have from previous years, what losses they could have this year, and what their taxable income is, to see if doing a conversion makes sense. Obviously, if you're a client of IRA Financial, we're here to help, and I actually enjoy kind of going through the process with clients, kind of seeing what makes sense. Yeah, there's sometimes no right answer, but it's a fun process, and sometimes you come up with a different answer than you expected, right? I can't tell you how many people have come in and said, I want to do a conversion. And then we run some numbers and we end up saying, you know what, it probably just doesn't make a lot of sense because, i.e., your tax bracket's going to be super low in 5 years. Just wait it out. Why pay the tax today when you're in a high tax bracket? So it all depends on your situation, and not only situation today, but what you think it will be in the future. So thank you for listening. I really appreciate it. If you're watching on YouTube, also thank you. Appreciate all the support. This is a weekly podcast that drops every Tuesday, so don't miss it. And hopefully I'll see everyone again next week. Take care. Have a great day, and speak to everyone again next Tuesday.